Hi guys, I hope we are all okay. I'm doing this video in response to a lot of questions that you've been asking, more so when in relation to Finance Act. We know that now we have new rules and new act, that is Finance Act 2023. So this is specifically for the purpose of students doing tax exams, regardless of which body you are in or which taxation exams that you'll be doing, so long as it is within the jurisdiction of Kenya and actually it is under the Kenyan laws. So you'll find that basically we're talking of students from CASMEB, students doing NEC exams, students from KESTRA, and any other body that basically examine the tax in Kenya. So you'll find that at this point, my good students, as much as there were amendments, there were some items that were deleted completely, and there are some others that were basically introduced, right? So in this segment, I want us to discuss on key areas, and basically I'll want to talk on three components. The first component is in relation to employment income. The other bit is in relation to basically resident, that is a taxation of non-resident persons. And the other bit will also be talking about taxation of clubs, members club, right? So as much as we know, like there are so many other elements that, of course, was introduced, which will basically affect us directly. So I've done another video in Arid and Associates. So maybe you can check our other YouTube channel, Arid and Associates, whereby you've literally described and dissect the Finance Act, each and every component. If you find time, just go to the other video, Arid and Associates, and the video, it will be uploaded soon in relation to the same. So in this case, talking about employment income, I understand that currently there is a scale that we're using, and by the way, this is very practical also for those who are not doing exams. For practice, it is also very key. Currently, there's a scale that is being used, but you know very well from 1st July, with effect from 1st July, that is the Finance Act, of course, will be with effect from 1st July in relation to the employment income. You'll find that these tax brands, or rather the tax brackets, actually, they have literally changed. Initially, we were talking of a maximum of 32 or a maximum of 30%, but right now we're having a maximum of basically 35%. And I'm going to elaborate for you how these changes will also come into place. Also, previously, we used to have like some benefits which were previously not recognized as a taxable benefits. But with this act, you'll find that now they are recognized as a taxable benefit. Another bit, you'll also find that we used to talk of some certain subscriptions which literally were not recognized, or rather they were taken as a disallowable expense. But with this act, of course, they are going to be taken as taxable income on employment, and so many other changes. But what I want you guys to have in mind is this: that this act, remember, it will be in effect on this current financial year. So that is to say, students who are doing tax, and specifically any paper in 2023, what normally happens is that any tax that is being set on this year 2023, it is based on, majority of the concept are based on the previous financial year. With the previous financial year, basically, we are talking of 2022. So you will find that whatever that we'll be discussing, you'll find that this will have an impact on the students, of course, will be sitting for any tax paper from, that is 2024, or if a question is structured in a way that it has part of this current financial year. So before we jump into details on that, I want us to see how this employment, how this new scale rate will affect us. And this is what I want us to do. So these are the changes that I want us to talk about. This is employment income. Talk about our employment income. I know by now we are using our current rate, which is basically from 0 to 288,000. Talk about from, of course, 288,001 to basically 388,000, and excess of 388,000, right? Which, of course, we used to have. This is basically, of course, talk of 10%. Talk about aspect of 25%, and talk about 30%. So this is what we used to have, right? But as per the new act, this will be our new graduated scale rate. This will be our new graduated scale rate as per the new act. So act, this is with effect from July 2021. This will be 2023. I don't know, I'm having 2021. July 2023, right? This will be the new effects. In a sense that I should be talking of this scale rate, that is, of course, 0 to 288,000. So I'll be having 0 to 288,000. We'll be having 288,001, 288,000, 288,001, 288,001 to basically 388,000. Then I'll be having 388,001 to a figure of, that is 6 million, to a figure of 6 million. Then, of course, I'll be having a figure of 6 million to 9.6, 6 million 1, 6 million and 1 to 9.6. Then talk about excess of 9.6. Talk about excess of 9.6. So that is excess of 9.6. Excess of 9.6. So this will be at the rate of 10%. Talk about the rate of 25%. We'll be having, of course, the rate of 30%. We'll be having the rate of 32.5%. And finally, excess of that we should be talking of at the rate of 35%. So this is as per the new, this is as per the new act, as per the Finance Act 2023, determining or determination of our employment income computation when it comes to tax. This is a new scale that we will be using. But the question will be, Mwalimu, will this affect us in these current exams? This is what I want you guys to be very keen with. As I mentioned earlier on, you will realize that for the purpose of your exams, many a times you'll always be tested on the last financial year. With the last financial year, in this case, in the context of exams, your last financial year basically is last period, which ended on 31st December 2022. That is your financial year. So that is to say, this new scale rate for any student who is being taxed within 2023, unless the examiner has given you for a period past July 2023, that is when it's going to affect you. But otherwise, it's not going to affect you in this current period of exams. That is all through 2023. Yes, it is that is for the purpose of exams, right? But practically, those who are going to receive your salary expect to be deducted using this new scale rate. That is from July 2023. And I'm really insisting on that so that you guys should be very keen when it comes to matters to do with these changes. That is the one change that I'll want to have it clear for you guys. You'll find that the whole essence of doing this basically, of course, is the government seeks to basically boost their tax revenue, right? A way of boosting the tax revenues. And that's why you find that there's a change in this bracket. So that is very important that you must be able to understand. That is one change. And I believe, talking of that, you know how to use this scale rate. I know, and I believe you guys know how to use what? How to use this scale rate. So the other item that I'll also want to have or talk about, basically, according to the changes as per the new Finance Act, this is the aspect to do with additional taxable employment gain. There's an additional, of course, talk about taxable employment gain, additional taxable employment gain, additional taxable employment gain. This is with effect from 1st July 2021, with effect 2023, with effect from 1st July 2023. I don't know what I'm kind of remembering today of 2021. So this is basically with effect from 1st July 2023. You will find that there is a new additional taxable employment gain, which in this case, it is again that it was not there, but in this case, you'll find that from now henceforth, it is going to be taken as a taxable gain on the employee. We have club entrance and subscription fees. Club entrance and subscription fees. Club entrance and subscription fees. These are new component. Initially, if an employer was paying for an employee club and subscription fees, initially they were taken as non-allowable expense in the books of the employer, and at the same time they were not considered as part of the taxable benefit on the employee. But with effect from 1st July 2023, with effect from 1st July 2023, you should be able to note and have it in mind that club entrance and subscription fees, it will be aspect of allowed, it will be an allowable expense in the books of employer, whereas in the books of employee, it is going to be taken as a taxable income. In the books of employee, is going to be taken as a taxable income. Very important that you have that in mind. Very, very key that you should be having this in mind, that club entrance and subscription fees, allowable expense in the books of employer, but taken as taxable income in the books of the employee, with effect from 1st July 2023. That is to say, again, that yes, these are the changes that have been effected, but you'll find that it will not affect us if at all you are dealing with the last financial year, which most of the cases for examination purposes, as I've mentioned, you'll be dealing with the previous financial year. So for practice, this will be with effect immediately. For the purpose of exams, you'll find that unless the examiner is very specific of the period. But many cases, as I've mentioned, you'll always be given to do what you'll always be given as per the last financial year. So that is also another key change that will affect you in tax. Then the other key area that maybe I'll also want us to talk about and have a clear discussion on it, but I won't be having that today. This is the aspect to do with what we normally refer to as post-retirement medical fund. Post-retirement medical, post-retirement medical fund, which you are referring to it as a PRMF, post-retirement medical fund. I know this is somehow new to majority of us. For the purpose of, for practice, actually, it is very key, and you must always be able to consider that. For the purpose of exams, you'll find that at this point, aspect of contribution, right? Now, if at all, let me just, because I've mentioned it, let me just state it. You'll find that for the purpose of examinations, any contribution that is being made to post-retirement medical fund, PRMF, in this case, you'll find that is going to be taken as a allowable deduction. Allowable deduction, but up to a certain limit. In this case, we'll find that we'll be having it up to a certain limit in terms of relief. You see, after you've deducted, after you have computed all your tax payable, below we'll be having, you have to measure it. You see the way you are doing with insurance premium. The same case that this post-retirement medical fund will also apply, whereby you'll be taking 15% of the amount that you're paying. You compare it with 60,000. Whichever is lower in this case, it is what you're going to take as a relief, because it's a relief that's going to be granted. But in this case, I'll mention this later on as we proceed. I'll mention that later on as we proceed. So this is a very key and important to note. Then you should also be able to understand that as at the end of the period, or rather as at the end of the day, that amount is exempt from the income tax. This amount will be exempted from income tax. That amount will be exempted from income tax. But we'll be talking of that in detail as we proceed. Now, the other key element that I've said I'm going to discuss in this segment today is what Mwalimu. We've talked of aspects of employment income. Yeah. Let us also have a look at the aspect to do with non-resident concept. Okay, the concept of residency. So this will basically affect non-resident. Okay, this will basically affect non-resident. So let us also have a dissect this component, so that you should be having it in mind. Whenever we're talking of residential, whenever we are talking of residential status, sort of about residence. Talking about residence, okay? I know we have the concept of resident and non-resident, whereby this is just a status that is granted to either individuals or corporates for tax purposes, right? So in this case, what we will be looking at in terms of residence, specifically non-residence company, non-residence company. What used to be there in terms of taxation, non-resident company, they were taxed at 37.5%. That is what used to be there up to the time that the Finance Act was in play. So currently, you will realize that we are not basically taxing them at 37.5%, but rather they have also been taken or reduced to 30%. But the question would be, how will this affect us in our examination? Just as I've said, that many a times this concept, of course, you'll always be tested in relation to the previous financial year. So that is to say, again, not unless you're given this financial year, which is, of course, talk of in between, that is a talk of July 2023 going forward. You'll find that you'll not be affected with this, no, unless you're given the period of July coming, or rather July 2023 going forward. So that is also very important to note when it comes to matters to do with residential status. That is at any given point in time, we'll be talking of this concept here, the non-resident status, from 37.5 to 30%. Then there's also another introduction bit, but this one again, just like a post-retirement medical fund, we are going to look at it on a deeper perspective. There is aspect that has been introduced, which it wasn't, or rather it was not there. Tax of repatriation of profits of a permanent establishment. That is a tax. Talk about tax on repatriation of profits, tax on repatriation of profits. That is of permanent establishment. That is of permanent establishment with effect from 1st January 2024. This is with effect from 1st January 2024. So let me explain first of all repatriation. Repatriation is in a sense like more so for these multinational companies. Say for example, Google, they have a branch here in Kenya, right? If not a branch, they have an establishment here in Kenya. Having this establishment, of course, their revenues are going to generate in Kenya. So this revenue that has been generated in Kenya, it is usually sent back to their headquarters in United States. So this new act, you'll find that with the introduction of basically tax on this component, any amount that it is repatriated on the headquarters, first of all, it will also have to be taxed. It also have to be taxed in Kenya. And it is going to be taxed in Kenya on the following formula, whereby we are talking of repatriated profit. How will you compute your repatriated profit? Repatriated profit is going to be computed as follows, where we are talking of net assets at the beginning, net assets at start. Okay, we are going to add our net assets. We are going to add basically our net profit for the year, net profit for the year. We are going to basically minus our tax payable on the chargeable income. 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 Of course, as at the end of the day, we multiply, or rather in this case, we less our net assets at the end. Net assets at the end of the period. Net assets at the end of the period. So these are will be computing what we are referring to as repatriated profit. This is now what we'll be computing, what we are referring to as repatriated profit. So you'll find that yes, this has been introduced under the new Finance Act, which ideally you'll find it to be very, very interesting. And I'm really yearning to guide you guys on this. Also, we'll be talking more of this as we proceed. Now, after we've talked of that, probably, I've also mentioned about taxation of members club. So allow me to erase here. There are so many changes, but I'm just mentioning a few. The one that I think normally affects students. The one that I think they normally, or it will affect students for this case. So there's also a bit of taxation of members club. Also, this one, of course, has been amended. Taxation of members club. Taxation of members club. Taxation of members club. Taxation of members club. So, how will this affect us? As per the previous guide, or rather as per the previous act, any income, or in this case, we were talking of it in terms of income generated within by members, such as subscription fees, talk about entrance fees, talk about interest, or rather penalties on late subscriptions. Ideally, we were measuring this where we had a 75% threshold. We used to have a 75% threshold. In a sense, that if income generated within by members, if income generated within by members, if income generated within by members is less than 75%, if income generated within by members is less than 75%, is less than 75%, this is when it was taxable. This is when it was basically taxable. While all other incomes were taxed. But if more than 75%, it was taken as a mutual income. And in this case, mutuality in law, in this case, you don't tax mutual income in of course, tax. But with effect or with the changes with this Finance Act, at this point, 2023, this has been scrapped off. That is to say, all incomes, regardless if they have met the 75% threshold or not, all incomes generated by members club, probably except aspect to do with maybe giving for donations and all the other items, all incomes generated by members club will basically be taxed. So that is also another important concept that again we should be able or to have in mind. But as I've said, unless the examiner has given you a period which lies in between this financial year, all these amendments and changes will not affect you in your exams. All these changes and amendments will not affect you in your exams. So that you'll be like, now with these changes, how will it affect us in an exam situation? No, this will affect you in the next, or rather come probably 2024. If you'll be doing tax, any question or rather any question to do with tax from 2024, that is when this should affect you. But as it is now, still you'll be tested with the previous financial year, not unless they have amended some, or rather not unless probably been given a period that lies in between of financial year. Next segment, I'm going to talk about areas to do with capital allowances. You'll find that capital allowances has not been affected that much except for diminution in value, right? Diminution in value, we noted that diminution in value initially we used to have 33 and a third %, right? But with this current financial year, you'll find that diminution in value right now will be providing an allowance of almost up to not almost but up to 100%. This is in the case of diminution in value, and so many other changes. So just be doing it little by little, so that as at the end of the day, we should be able to master and grasp all these elements. At this point, I also want to take this chance to invite you guys, those who are doing tax, regardless of which examination body that you are in. So long as you're having tax is just tax. I'm inviting you to join MDarasa. Right now, we have a new platform, MDarasa Learning Hub, which basically you can get any content that you want from various tutors and trainers around. To this point, guys, thank you so much, and let us meet in our next session as we'll be discussing matters to do with tax in all other areas. Thank you.